Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Tilray Brands, ticker symbol TLRY. And so here I am recording this on the evening of Wednesday, October 9th, after Tilray closed at a price of $1.63, being down 1.21% or 2 cents on the day and being flat in the after hours. So that is already closed, the after hours trading. And we do have earnings coming up in the morning, tomorrow morning on the 10th. So I expect some volatility. It does look like we have been trading in this wedge pattern. Could be a descending triangle, which is bearish, more likely to break to the downside, but it could also be a wedge and it's testing the bottom and it could be breaking out to the upside. At this point, I feel like it's probably more likely that it's going down, but it could always be a fake out. So I wanted to go over that in this video, as well as the unusual whales options data for Tilray, which I have been doing every day for like the past week and a half, really just leading up to earnings because I am participating in a pretty small trade, just kind of practicing some new techniques, stop losses, and really just that. And because I think that Tilray is a company that's worth investing in for the long term, especially at sub 170. So yeah, I mean, there's a lot of things going for the chart, and also one of those things being this gap at 199, around $2, that has not yet been filled, although we did almost get to it on August 15th, hitting a high of 198, almost getting there, being 1 penny away. So it's kind of a neat little gap there. And so yeah, let's see, what should I start with here? I will probably start with how it was, a pretty, I don't know, not really too exciting day, but kind of a disappointing day, and that price came down. We did hit a low on the day of 162, which is the same as it was over here, the red line that I have marked. And so, we had been putting in higher lows, not considering this low at 150, because my understanding is that was just kind of a blip to the downside. No orders were filled, so let's disregard that one. And so considering that, we have now broken our trend of putting in higher lows. Now we have potentially, a double bottom, or potentially we are going to be putting in lower lows. And so with that, for the trading for the day, I did my normal typical trade that I had outlined before, so I'll go over that towards the end of the video. But if we do just look at the 10-minute time scale, we can see the price action for the day. And so I believe after the first half an hour or so, maybe actually over here, I was making that Luminar video around this time, and so I must have noticed it around here when it bumped up a little bit. I said, whoa, crap, it's at 162. That's the prior low. I don't want to be seeing that again. But it hasn't gone down to 161. So what I might do is place an order to get my average down, get my position size to be larger, with a limit buy at 162 that I placed to expire at the end of the day. And well, you might think that because there were these lows here at 162, that order got filled, but it did not. So that was kind of disappointing. And it did expire now that the after hours trading is closed. Maybe I will place a buy for a dip in the pre-market or tomorrow during the day. I have not decided, but I still do have that stop loss at 160. And the reason for that, I'm just going to switch back to that daily time frame, is because if we look over here, the low is 161. And so, 161, 162, I was not expecting it to come down to 162. Maybe it does. Maybe it forms a double bottom. But if it goes lower than 162, that is, a lower low, and I could see this coming down to 150, which, like I said earlier, I don't really feel like this wick counts, but there is a wick over here. That does count. 150, that was hit on June 21st of 2023. And so, my concern is that if price does break below 162, and if 161 doesn't catch it, I think we could be going back down to 150. And so that's why I have the stop loss there, very small position. And what I would probably do is kind of evaluate it to see if I want to buy at 150 or, wherever a bottom might be. But then, by having a stop loss at 160, that would save me, the price of, however many shares, the 8-cent difference from, 160, or I guess, sorry, 10-cent difference from 160 down to 150. So, maybe that's not a ton. But this is really just me trying to get used to using that stop loss, and 160 made sense for this. And so then, looking at the levels on the chart, we did get our second close, actually our third close, below this dashed purple line, which is pretty disappointing. That is discouraging. Although I feel like this close is the confirming close down below that level. So now it looks like that level is probably going to be resistance, but maybe we gap above it tomorrow. Who knows? That is a possibility around earnings. You never know. But so the reason why I think that this third candle, the first is the confirming close below this level, is because we got our first close below it on the 7th when we closed at 165 on the 8th. So yesterday on Tuesday, we got another close at 165. So that did not confirm it because it did not close lower than the close that broke the level. And now we have seen that with our close at 163. So, that is not so great, but there is this purple solid line that we did close below, but we only got one close below it. So maybe we do close above it tomorrow. And, what we're seeing here is a fake out. And so I could see that with 162 being here, it could have been pushed lower. That did not happen. So yeah, there was increased volume today with it coming down. So maybe that is, some panic sellers before earnings, or just trying to take some risk off the table. But if we do take a step back, we can see where these two purple trend lines originate from. And I would argue that the solid one is more significant. So I'll just, move over here, adjust the axis, or the x-axis, so we can see this a little bit better. And so what I have here is both of them begin at this pivot low from June 21st of 2023, and that is at $1.50. And we got two different pivot points over here, so you can see one there, and let's see. Actually, I got to figure out where the other, and then the other one's here. So I'll zoom in here so we can look at those pivot points a little bit better. And so this one, it looks like the low and the close on March 14th, so Pi Day of 2024. The close and the low is at $1.60, and so that's the other pivot point here. We also have that low over here. So yeah, and that's actually, another case for putting in higher lows, because, we got 160 over here, 161 here, and then just recently, and as of today, 162. So, as long as we're not going lower than 162, we're putting in higher lows still. We're maintaining that, as far as I understand that. And so, yeah, so there's the two pivot points there. Then this other purple one goes to the, let's see, the low over here, which is that 161. 2 days hit 161 over here. So that's June 25th and June 26th of 2024. And as you can see, when we hit those lows, we did break below that dashed purple line. You can see it there with it zoomed in a little better. And yeah, so I do think because of that, the purple trend line is, really it's the last line of defense. So if we are getting one close below it, like we did get over here, that was a fake out. We got a bounce following that. We got an upside move of about 16%, so more than 10%, so that's pretty nice. We are now closing below that level again, so hopefully with earnings, we are seeing a move to test this downtrending line, and we do get a breakout heading towards $1.99. So that is what I am hoping for. That is what I am looking for. But like I said, I do have a stop loss at 160. And if that is filled, which I believe can only be filled during market hours. So if we get some crazy price action during pre-market, I don't think that will be filled. I will not be cutting losses at 160 if that is the case. And, then I would be doing that, seeing how it opens. But maybe that's not the case. Maybe the stop loss is filled during the pre-market, and I learn a lesson there. That's what this trade is all about for me, getting more used to using a stop loss, having a thesis behind it that we're not going to go lower than 162, which we have thus far not gone lower than it. So feeling a little on edge, but I don't have a lot of money on it, so I'm really not that concerned. And I was thinking about it. Before close. I did have one limit order filled as far as the call contract. I did not have the second one filled, which I'll go over at the end of this video. And right before close, I was thinking, well, do I want to buy a put just to kind of hedge in case I'm wrong? And I was thinking about, let's see, the expiration of November 15th for puts, thinking about the $2 strike, and that would have cost me $45 at the time. Right now it's $50. I did not buy it because, maybe I lose some money on this, but with the stop loss, I'm not going to lose a ton of money, and I don't have more than $100 on it. This would put that over $100. So I didn't play around with that. I'm just going to stick to my thesis that I think it's going higher, that I think it's, undervalued, really below 170, and I think it should be up at 2. So, that's my thesis. I decided not to hedge with these puts. Maybe that's a bad decision, but, whatever. Let's see. I was going to say something else, I think maybe related to calls. Yeah, so this is the contract that I'm holding, November 15th, $2. I did have one buy filled at 9 cents. It has now bounced back to 11. I will go over this stuff in Unusual Whales here in a minute. And, I forgot to buy another one at 10 cents or so before close. And so, I have less than $100 on the line, but I was considering, as I believe I had mentioned, getting my share count up higher at 162, but that order did not fill. So anyways, with all of that said, I am going to switch over to Unusual Whales so we can look at the data from today. So this is the Tilray, overview for the day of October 9th. So that is today. I feel like this is a good omen. The volume traded today was 69,046. Would have been, a wonderful omen if it was 69,420. But whatever, things don't always work out perfectly. But yeah, anyways, with that, we can see that the premium, the amount of money traded for the contracts at Tilray today was just under $700,000 with a net premium, an increase of $88,000 and $88,945. I'm not used to reading big numbers. So, just under $90,000. And we can see here the put and call makeup for the day. As you can see, there's more green than red, so the majority was on the call side. But hopefully, that's not, being the sheep, and we're following them, or I'm following them by thinking it's going to be breaking out to the upside. Maybe, we want to be the wolf and go red. But that's not what I'm doing. And you do whatever you do, and I'm happy if you make money either way. That's what this is all about, going long or short. We are here to make money and support each other as retail. So, don't get mad at anybody if they've got some puts. Just saying. I don't have any. But yeah, just saying. Some people get very, kind of sentimental about their stocks, and you can make money going both ways. Anyways, with that being said, puts, 13.5 thousand in volume versus calls, 55,542. There's the 42, for 420. So, a lot more volume traded in calls today. Premium for puts was 126,000 versus, a lot more than that in the call premium, over $500,000 traded today. So looking pretty good, but the net premium from all of this, under $100,000, but still, that is, almost 9 YOLOs on Wall Street Bets. So that's 9 degens coming together with good ideas like this is going up. So, hopefully that's what we're seeing. Anyways, the underlying stock price that's in yellow, we can see that, it traded really between 162 up to 163. Let's see, I'm actually going to flip back to the chart here. The high today was 167. So you actually don't see that, in this little line chart here. And what we can see, let's see, I'm just going to flip over to, I'm going to do this here, call and put premium. I'm going to do this a little bit differently just because I'm kind of getting used to it. Call and put premium with the bar charts. Okay, so this isn't really too exciting. I just thought I'd kind of see what that looks like. I'm going to switch over to see net premium. Over here, we can see that, volume looks largely bearish. Over here for the majority of the day, but then towards the end of the day, we see kind of a spike, more green volume there. And we can see call premium rising up, whereas put premium went up earlier in the day, kind of came back in as that put premium was going up. And if I do scroll down for the day, we can see that the majority of the options trades, I believe this is represented by the total premium here of that 700,000. 55%, so just over half, was on the bullish side, a little bit being neutral, and then the smaller portion of bearish versus bullish, the bearish portion being smaller than the bullish side. So that is potentially good, but again, there's not like millions and millions, tens of millions of dollars on this. So, it could just be a bunch of people like us, thinking it's bullish and just being wrong and losing money. So good to consider that. And also, when talking about options, I forgot to mention this earlier, they're very risky. So, I'm primarily using them for data here. I do have some calls, but I have a very small position. I am fine losing, what I put on the table, and I do have stop loss for the shares, which I will apply to the contracts. But anyways, I am going to switch back to the options volume here. I'm going to switch over to the 5-minute, just a little bit more used to seeing that. But then I will switch over to the 7-day, which then switches it to 30-minute. And so actually, we did see these spikes. It doesn't include September 30th, which we also saw increased call volume. But I believe it was a little bit lower or similar to what we saw on the 4th over here. And then we have, I believe this is the 5th. I don't see in the little pop-up thing, I don't see the date, but this is the 3rd. This would be the 4th. That was the weekend. That was a Friday. And then this is Monday, Tuesday, Wednesday. And so we can see that the call contracts, this is the data represented in the table. We can see that, actually, is that represented? Not in the table, in the chart. I'm just going to switch this over to, so, these numbers are going up. So, this is 55.5 thousand, 13.5 thousand. If I switch over to 7 days, we can see that this is now almost 33,000 versus almost 500,000. So, a lot more calls traded. So, that is good. And, for the majority of them, the positions, I believe they are on the bullish side. This is just the daily data for today. But generally, seems to be like more people are on the bullish side. Maybe that's a bad thing, though, if we're going long. Maybe we're wrong. Here, it does look like calls, the hottest contracts that were traded. It does look like the $2 strike call for this coming Friday. A lot of sells, majority on the bid side. So there's that to pay attention to. And then also the $2 strike for next Friday, the 18th. That's actually a majority buy side, so that makes me feel a little bit good. These are just really getting risky, with the expiration just being a couple trading days away. Makes sense for people to be not wanting to take that risk because these, while 2 cents might not seem like a lot, they can go to zero. And if you got multiple contracts, that's a good amount of money because every contract, 2 cents times 100 shares, that's what they represent as far as like the kind of volatility that you're exposed to, as far as I like to interpret options. And so that 2 cents is $2 per contract. Let's say you got 100 contracts, that's $200. I don't have that many. I'm a small fish. But anyways, majority buy side here, so I think that's good, or more majority ask side, I should say. Then here we got puts for the 18th, $1.50 strike. People selling those, so that's bullish, so feeling good about that. call, 150 call, or strike, for this coming Friday. That majority buy side, that's 150 strike. So that's actually, but 150 call and put, both are going up. So maybe take that with a grain of salt. 250 strike for next Friday, majority on the bid side. So getting rid of those. And then, coming down here, I'll just go down to the one that I hold. So Tilray 150 strike for next Friday. That's a call, majority on the buy side. So, while that is a lower strike than current price because those are majority on the buy side or on the ask side, that is bullish, even though the strike is lower than current price because, calls, puts, it's all about the direction that they're going in. If a stock price is going up, call price will be going up, even if it's in or out of the money, so just because the strike is below current price, because it's an in-money call, it still means value will be going up. Or, I believe it should be, but it just depends on that theta decay. The contracts decrease in value as time goes on. But then here, this is the one that I hold, the $2 strike for November 15th, 36 days out, majority on the buy side. So feeling good about that. And here we can see the open interest. And so I think this is really just, highest volume. So these are traded in and out. But what is held? We can see open interest, almost 41,000 for the $2 calls for this week. But we did have a volume of almost half of that traded today. So that does suggest that this open interest will be going down to closer to 20,000. And then over here, this is majority on the buy side. So this 23,000 will be going up towards, around 30,000 open interest for the $2 calls with a strike of next Friday. So that is also looking pretty good. And, so these are, in the tens of thousands. So feeling good about those. And then the other one that's in the tens of thousands of the ones that I talked about is the one that I hold, which is 18,000, about 50-50. So, with 2,000 volume traded today, we can expect 18,000 to be staying approximately the same, but maybe going up a little bit tomorrow. So something to consider there. I've just got getting some alerts on my phone, so I'm just do not disturbing it so I don't get distracted by it. But yeah, so these are the contracts here, and I'm going to flip over to the contract lookup for the one that, actually, before I do that, I should mention this over here, the hottest contracts. And so open interest contracts, whereas this is highest volume. The open interest ones, $7 strike for January 17th, 100% on the buy side. That's just under, 500 contracts of volume on the bid side, or the ask side, I should say, today. So presumably being bought, and the open interest there is 62,000, so much higher than the open interests over here. Then another one that is high open interest, about 60,000 open interest. And so that's probably going to go up to about 60,000 by tomorrow. And that is a $2 call for January 17th. Those are going to be more pricey, 18 cents or $18 per contract. And, 3 cents over here. And so that's actually, kind of an appealing one. It's only 18 cents, that's one that I'd be intrigued to buy. It's 10 cents over here, but this buys you, an extra couple of months wiggle room with December and then January. So that's one that I regret not considering. But, that's what I'm doing here with these videos, is just getting more familiar with the data on unusual whales, hottest contracts by volume, and open interest, both good to look at. And then here, let's see. This is, all of the Tilray data down here. I'm just going to scroll to it with the sidebar thing here. And so this, I feel like, is a little too much information for me to really break down for you guys, so I'm going to skip it. But I believe this is the historical, Tilray data for all contracts, calls, puts, whatever. But so rather than going over all of that stuff, I'm going to go over it in the contract that I hold, the $2 call with the expiration of November 15th. 36 days from now. And here, this is showing the data for the 9th. And we can see that there was a volume traded of about 2,000 contracts with an open interest of about 18,000 that was carried over from yesterday. And then so from that, we have another, 2,000, but then we're going to break that down based on the bid and the ask. And so, I think that number will go up, but by not by much, and that's kind of what I suggested earlier. So yeah, 18,000 that are still being held. These could all go to zero though. So just because there's more than 10,000 contracts there doesn't mean they're not going to zero. And so the average fill for today was about 10 cents. I had one filled at 9 cents, so yay for me. And then premium traded today, 20,663, given that that last number is not a 6. I feel like that's, not a bad omen. So hopefully this is going up tomorrow, but if not, whatever, I don't care that much. I'll survive. So we can see the bid volume, 852 contracts. And then, 129 on the mid, being kind of neutral. And so I will say that those are probably, let's just assume, I'm going to lump them over into the bid side. And then we've got, so it's about 1,000 contracts there, and then about 1,091 on the ask side. So it's about 50-50. So I don't really expect this number, 18,001, to go up by much, but I can pull up the calculator so we can calculate what it should be tomorrow. Yeah. So, and I keep closing the calculator app so it defaults back to zero. I'm going to leave it open all night just to see if I do the math correct on this, see what the open interest is at open tomorrow. And so, the way that we'd calculate this is by, putting up the open interest, the current open interest, that's 18,001. And then so I'm going to subtract my math is not going to be right because I'm assuming that the mid is on the bid side, and that may not be the case. So I'm not going to check this tomorrow because I don't, I'll be off no matter what. But anyways, 18,001 minus 852 from this on the bid side, and then minus 129 on the mid side, and then plus, did I do that correctly? I didn't do that correct. Did I do that correctly? Subtracted, about 1,000. And then so now we're going to add this 1,091. Is that right? Yeah. There's no comma on the calculator, so it's throwing me off. So it went up by 111. Sorry, 110. And so, from this 1801, that's assuming that all of these are on the bid side. So it's gone up to at least 18,111. Whether that's good or bad, it's not really much of a difference. And, it was kind of neutral here on the day. Sorry if there's a siren, if it's bothering you guys, but I can't control that. Let's switch over to the 7 days so we can just see, we have had these days where there was more on the ask side, more on the buy side. Overall here from these past 7 trading days, about 3,000 on the bid side, about almost, 6,000 on the ask side. So that is, about 1/3 bearish, 2/3 bullish. So majority bullish in my view. So I feel good about that. I feel fine about that. If I switch this back to 14 days, we can see, maybe this is more informative. Same kind of breakdown though, bid side about 7,000, ask side about 12,000. So, about 1/3 here, about 2/3 there. But yeah, I'm just going to switch that back to the daily because I'm going to scroll down so we can look at this data. Just going back, the historical volume over open interest for Tilray with the $2 call strike expiring on November 15th. And so we can see that the open interest has been going up the past 4 days. It will go up a little more tomorrow. So that is good, but it's not going to be a huge amount. What we can see is that, there was an increase of about 3,000 contracts on October 1st, and we have not seen a decline of those 3,000. Maybe, the person who got these or whoever got these trimmed, but there was a net increase from those 3,000 contracts. But again, it's only 3,000 contracts at, the average of 10 cents. That's $10. So 3,300 here times $10. It's only 33,000. So that's about 3 YOLOs on Wall Street Bets. So nothing too crazy, but what we can see here is the majority bid versus ask. The majority is on the ask side, so that is bullish. So I do feel good about that. But again, it's kind of let's see. I'm going to switch back over to here. Just looking at this, let's see the call premium here traded the past 7 days. Let's look at the past 14 days. 7.5 million traded on the call side, and about and this is all contracts, about $745,000 traded on the put side. So it's about 10 times that on the call side. But are these contracts being held? We have 683,000 calls over the past 14 days. And if we look the open interest, this is for the different ones. If we look at the total open interest, 829,000 for today. So yeah, I think that's kind of a useful value to be looking at, because that's all of the contracts. And so we see that, let's see, I'm just going to scroll from this thing over. Oops, no, I'm just going to scroll from this one. We can see, let's get all of that into picture here. So this is the October 9th. You can see that over here where the cursor is coming down to the 16th. And let me know if you'd prefer that I get a bigger cursor. I think I can change that in my settings, but I just thought of it, so I thought I'd mention it. Let me know in the comments if it'd help you see what I'm looking at if I had a bigger cursor. But anyways, what we can see here is the total open interest, was 807, almost 900,000 contracts on September 20th. That has declined a little bit, coming down to a low of about 735,000 contracts on the 30th. But then that started going up on the 1st, which is not really that surprising because there were a lot of calls, or at least the ones that I have bought on the 1st. And let's see, from that 1st, going up, we can see 735,000. We're now about 100,000 more than that. So the calls have been increasing, the open interest has been increasing, and we can see that the majority of that is on the bullish side, other than these select few days that are right around 50. But the only one that we see that's like 78%, that is from October 3rd. On the 1st, that believe it or not, only 44% on the bullish side, and part of that was the calls that I'm holding. But let's see. One other thing, I've got this up for charge point right here, but I'm going to pull this up for Tilray. We can see what the max pain is for this coming Friday. It's $1.50. So price could be going down that way, but it doesn't have to. If we look at the monthly contract, still $1.50. And then if we go over, I'm just going to go through all of them for October 25th expiration, $1.50. And November 1st, yep, this starts to go down, $1. So maybe that's a bad sign, but maybe that could trigger, a squeeze if we're closing well above max pain, because we do go back to $1.50 the following week. This is the expiration on November 8th. And then for the monthly contracts, back to $1 though. So do take it with a grain of salt. While I am bullish in my position, it could be going down, 63 cents. To $1 to that max pain. And with that being said, before I close the video, I like to do it on the chart rather than unusual whales for whatever reason. I am just going to bring up my position that I have going into earnings, which as you can see is pretty small, but this is really just to manage, getting used to the stop loss. And, if we do break lower and I do get stopped out at 160, I could rebuy at 150, and I'll probably just go with shares then rather than calls. And so my plan with these 10 shares, very small position, only worth less than $17 with the shares. I did place an order to add 90 shares today at 162, but it was not filled. And my thought process with that, I'll just talk about the shares before I get into the calls. My thought process with that is that if I got 90 more, I'd have 100 with an average lower than 170, already lower than 170. So I'd feel good about that. And that would be buying at that low. If I get stopped out at 160, it's fine. It's like a 2 cent difference, not a big deal. I'd be fine with that. 2 cents times 90, it's like $1.80 difference total, but whatever. And so my thought process, if I were to get up to 100 shares, I'd look at calls. And, then I could sell a covered call. So if my average is, less than, 169, like 165, let's say, probably be 163, I think, whatever that breakdown would be, buying 90 at 162. Then I would sell a covered call that expires, on October 11th with a $2 strike. And then so that would be putting me in the position of, I have 100 shares. And if it closes above $2 on this Friday, I'd be forced out of my share position. But I would collect this premium for selling, which is not that much. It's only 2 cents, which translates to $2. But then I would be guaranteed to make money buying 100 shares around 163 and then selling at $2. That is, let's see, what is the percentage gain of that? Let's see. I don't know how to do I'm going to just, approximate. So 163 times, let's see, would that be like around 30% gain? It would be less than that. So that would be about a 20% gain. Let's see. 163 times 1.2. It'd be about 1.2, a 20% to 25% swing. So, that's kind of nice just over the course of a couple days, way better than a savings account. And that's kind of the way I'm trying to approach this. If I can make, 20% in a couple weeks, I get that down to a system, a routine. I'm going to be rolling in pretty good shape pretty soon. Even though it's a small position, this is just practice, fine tuning, how I handle this with the stop loss at 160. But then, that's for shares. If that stop loss were to be filled, I'd probably dump half of my calls at a loss just because, I think, maybe it's going to just bleed over the course of the next month and these contracts go down to zero. And so the the contracts that I have are all this one contract, November 15th expiration, a $2 call, $2 strike. And I had been just, placing limit orders every day. And these times, by the way, are central because I'm in the Midwest. And so that's what I've got there. And so let's see, maybe actually I do want to change that to Eastern time if I am sharing this stuff in videos periodically. But anyways, I've got 7 of these contracts that represents about, a value of about 700 shares, as far as price movement goes. And my average is right around 11 cents. Did get one today at 9 cents. My 8-cent one was not filled. And I need to remember to close that because I don't want to be buying more after earnings. This is just a short 2-week or so trade for me. And so the total that I have in the calls and in the shares, I'll just do this in the calculator just so it's here for all of us to see. $74.35 plus $16.90. I am risking $91.25 on this, so it's a very small trade. And my thesis is just getting better at managing not only the stop loss, but also accumulating contracts in a systematic way. I typically only trade one contract at a time just because I don't want to have to deal with the big swings in the money and the price going up and down percentage wise. And these are pretty cheap. So, this is a really tame trade. I'm not emotional at all about this. If this goes to zero, that's no big deal for me. And so that's why I wanted to do this. I wanted to kind of track this leading up to earnings because this is just a way of managing stop loss, managing multiple contracts, and seeing how that plays out. And so I will probably do a video tomorrow evening to follow up on this, but I may not after earnings day. It just depends on what happens with it. I'm forgetting to mention this. My plan, with these calls. So I got the stop loss here at 160 for the shares. If that gets filled, I'll deal with it. It's not a big deal. I lose 90 cents, whatever. then I would just reevaluate and see maybe I want to buy back at 150, or maybe I get stopped out at the bottom. That's fine too. And so what I would do is then I would sell half of these contracts, hold on to the rest, and I actually have 3 sells placed on these. I do my trades on my phone, so I'm just pulling it up here so I can tell you, because I don't like to share my like to keep it keep the personal stuff a little bit distant, just in case there's a number up on the screen that shouldn't be there. And so for me, I have a limit sell at 14, 15, and 16 cents. And so what I will probably, and so that's about, I think it's about 20 to 30, 40, 50%, somewhere around there. Let's see, no, 17, yeah, whatever, it's more than 20% taking profits with those. And so what I would probably do if this does go below 160 during market hours and I'm stopped out, I'd sell 3 of these contracts at a loss, no big deal. And then I'd keep those limits for the 4. And with the remaining one, I would just kind of hold on to it to see. Those might end up going to 0, but it's not going to be devastating for me. That's like $44 to hold on to those. So no big deal. But yeah, anyways, this is kind of a longer one, but with earnings tomorrow, I thought, I just kind of ramble on about all of this stuff. Hopefully it's helpful for you guys. Hopefully the thesis that I have makes sense to you guys. I'm really just trying to manage it, navigate this, because what I end up doing, has happened to me. I'm not disappointed in my positions, but I've got very large positions in AMC, GameStop, Luminar, ChargePoint, Biora Therapeutics, and I'm just holding those for the long term. And so I want to be entering trades with the plan of, if it comes down, I'm not going to be holding forever. Maybe I'll re-enter at a lower price. Maybe I won't. With the plan that if I don't get stopped out, then there's a lot of upside potential for it on a percentage basis. I'm not really too concerned about the dollar amount right now because I just kind of want to fine tune this. Working with money, so it's more than paper trading, but it's such a small amount of money that I'm not emotional about that, and I just kind of want to scale that up. And one thing, I need to mention this, I keep forgetting to say it. From doing this analysis, from tracking this, I'm only putting $100 on the line for it. If I were to, put 1,000 or 10,000 on the line for this as I get better at doing this, as I, have more money to play around with, as the successes build, I probably wouldn't partake in this one. I probably wouldn't put $1,000 on this one because it just seems a little too 50-50 that it's down here. It seems like it's looking bearish, like it's going to break lower. And so that's what I'm prepared for with that stop loss. It's just not a clear, it's broken out, it's going higher, or it's holding the levels. It's not as likely to go lower. It is holding this solid purple line, but I'm not terribly convinced it will be above it at close tomorrow on the 10th. So do trade cautiously. Just because I'm making videos about me, myself, being bullish on it, that is just to exercise this process and to learn, whether that's from my mistakes or my successes. This channel is basically a trading journal for me. And so I hope that this has been helpful for you guys. It's been fun exchanging with you all. And I will do a follow-up tomorrow, but probably just to share, whether I plan on walking away or not. But tomorrow's probably my last daily video on Tilray. But if you have enjoyed this series, make sure you let me know in the comments down below. And, of course, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thank you so much for watching, and hopefully earnings is great tomorrow. Take care, you guys.